Hello and welcome back to another video with me, David Jones, and Trading 212. We talked in the series about the importance of traders' psychology, about how winning and losing in financial markets isn't just to do with staring at a chart and getting your indicators right. But I think maybe an important bit of trading psychology starts off right at the beginning. I think for plenty of us, when we first open a trading account, one of the big, almost mental hurdles that we've got to overcome is placing that first trade. And I think until you place that first trade, of course, it's very difficult to start on your journey of trading. So I thought I'd give maybe a couple of tips as to how we can overcome that. First of all, let's think about why placing that first trade is difficult. If it's something you've never done before, you maybe get nervous at the prospect of the loss if things don't go the right way. Now, taking manageable losses is all part and parcel of trading, and the hope is that our profits outweigh the losses. But of course, we can manage the risk of that initial trade. So I'd say step number one, when we found the market we're interested in, is, not surprisingly, if we just scribble on here, point number one, the most important point, probably on all trades, decide on the stop loss. So we're going to place our first trade, but the most important thing we think about is, okay, if this doesn't work out, and if it's something you've never done before, accept the fact it may not work out, then how are we going to manage that risk? Secondly is, again, I think this is really important from a psychological point of view, is trade small. So whoever you're trading with, we're trading in this example, of course, with Trading 212. The first trade you do, you should do it at a level where, win or lose, it doesn't matter at all. I think what we're trying to do here is overcome maybe that mental barrier of doing your very first trade. So to recap, decide on a stop loss and trade small. Trade the smallest you can on that trading platform, so no win or loss really matters. So we looked at it in theory. Let's have a look at it and actually do it. So if you look on the screen here, the market I've got, I'm sticking with Forex markets for now, the currency markets, because they're always volatile. There's always something going on. So the market I've got is the pound against the dollar. And I've got a very short-term chart up just so we can see some of the movements that we've seen today. It's been a reasonable sort of choppy day so far today. But what we're going to do is, first of all, we're going to decide on a stop loss. So we're going to manage our risk. So let's say, I think, the market since 7 o'clock this morning has been moving higher, and so far the bias in the market is still up. And I would stress that getting the direction right, of course it's important for trading, but when it comes to getting that first trade out of the way, I don't think it's the be all and end all. What we want to do is actually get used to the process of trading. So I want to be a buyer, and I'm going to put my stop loss maybe under these lows back here, around about 2017 in this example. So about 40 points or so away from where the market is currently trading. So I'm going to take my time. There's no rush to do this. So what I'm going to do is I'm going to choose the pound against the dollar dealing ticket from over here. So I've just highlighted it on the left-hand side of my screen there. I'm going to click to open up the detailed trade box. So I said point number one, decide on a stop loss. So our stop loss is going to go about 40 points away from where the market is currently trading. Point number two is to trade small. So I want to trade the smallest I can on this platform. And you can see where the trading ticket is now, there's a box that says enter quantity. So what I'm going to do, I'm going to choose, if I choose the lowest on the list here, let's put in 3,000. And that's it. I'm ready to go, but I want to add my stop loss. So I click on that to add my stop loss. And I've chosen, as I was saying, 40 points away. So I just type that in. And that's it. I'm ready to go. So the market's currently 120.48, and of course that will be updating in real time. I'm trading it the smallest I can on this platform. I've put my stop loss in, I'll click buy. Congratulations, the hurdle of the first trade is out the way. Now I'm not too bothered whether that's a profit or a loss, but I can track it in real time down here at the bottom of the window. And if I wanted to, and if I change my mind now and think, okay, I've done my first trade, I've jumped that mental hurdle, I can just close the trade out for what looks like currently a 20 pence loss on this position. But it's very easy to monitor the trade in real time. I've got my stop loss in there, protecting me if the market should change. You can see that here under SL. So it's understandable why placing that first trade is such a mental hurdle. But if you qualify the risk using a stop loss, and if you trade as small as you can, so the amount of money at risk is really negligible, I don't think getting past that barrier should be such an issue. That's it for this sort of brief look at one element of trading psychology. There's a whole other series of videos that we've done you can watch that looks at other parts of traders' psychology. If you'd like us to cover any topics in the future, just leave a message in the comments below. But for now, from me, David Jones, and Trading 212, we'll leave things there.